now. Sticking on the topic of gas prices in California, they continue to fluctuate. And joining us now to talk a little bit more about the basics, kind of break it down about the ups and downs, is President and CEO of Wilsey Asset Management. Brent Wilsey is here in studio. Good morning, Brent. Thanks for coming in.
Good morning. Good to be here.
Well, you know, my first question is very basic.
Yes.
Let's talk about what really determines gas prices.
The main thing is the supply and demand of oil. If you have a big amount of oil, prices will come down because that will meet the demand. If you have a shortage of supply and the demand is high, you're going to drive prices up. There's no way you can dictate that. And then you have the refiners is another point, because you get the oil, they got to refine that oil. They can have the same situation. We have a shortage of refiners here in the country because we've not allowed refiners to be built, and they close them, but then they don't reopen them. So if they have a shutdown, they operate at very high capacity. If they have a shutdown for maintenance because something broke, we got a problem. So then you have a spike there as well.
Like when that happens all the time.
Yeah, and it does. I mean, especially when the high demand is in summertime. And then you also have the regulations where they try to force these regulations on them. They force taxes and do this, do that. They're in a business. They've got to make a profit. So they have supply demand, the business aspect. This is going to move the price of gas. And right now, we're in a very good situation. For a while now, we've been, we don't care about gas, it's pretty low, but this could change going forward.
Yeah, and I want to piggyback off of what you just said, because as someone who's an expert in finances, what does the current situation look like? What are you seeing?
Well, this current situation looks pretty good. Supply is good, so that's why you don't have a spike in gas prices. We do have the inventories are not as flush as they should be, so any disruption could really change that scenario. We have the war in the Middle East, the war in Ukraine. So far, this is going okay, and initially I was concerned because Russia, they do produce a lot of oil. They're going to be shut down. Well, they're now selling their oil to China and India, so that has helped the world supply. And then the other thing, China, their economy is not doing so well, so their demand for oil is not that high. So the current situation looks pretty good right now.
And what could change going forward? That's interesting because, I mean, here we are. We're
Right.
2 weeks away from an election.
Right, right. And that's a big thing. 2 weeks away from the election. This is a big election because normally, you know, what are you concerned about? Well, we have, again, obviously energy prices. We want to keep that. You've got to look at the leader that's going to look at, you know, what are you looking at for energy prices? And then also, too, very important, that war in the Middle East, Russia. We need a strong leader, and you got to pick who you think will be the best leader, because that's going to determine the price of your energy going forward. We pick the wrong leader, we're going to have chaos, and oil is going to go up, gas will go up, natural gas will go up. I mean, we're going to be in a situation we don't want to be in, and we've got to get Israel, because what can happen if Israel gets in a situation where they start attacking Iran's energy source? What they could do is they could start saying, okay, well, now we're going to block the Strait of Hormuz. So it could disrupt the whole oil supply around the world. And even if we pump a lot of oil here in the United States, yes, we can get our oil supply to a good level and keep prices low. But it's a world market.
It's a war. I was just going to say, this is like a global impact. And I'm sure, and if you could share with us, you know, with your clients, when gas prices are unstable, which, I mean, they kind of always are, but when there is a drastic change, your clients get worried? I mean, do you see?
Oh, they get worried. And the thing, too, if we see oil go up to $100 a barrel, which is a very possible disruption around the world, what happens is that it's not just the price at the pump. It is inflationary because we have transportation costs, our supply costs. People don't realize that petroleum, it's made for plastics. You'll find it in asphalt. You'll find it in chemicals, many different things, petroleum. So that causes everything to go up. So we could see a bad situation in the Middle East. We could see inflation come back to where it was back in 2022. We don't want that. We want to keep our energy prices low by having that supply there and demand at a reasonable level.
Yeah, supply and demand. So many different factors here that come into play with this. But thank you for breaking it down and simplifying. We can always count on you, Brent, for that. Anything else that you want to share related to this topic for our friends at home who might be watching?
Yeah, I mean, one thing I recommend for the investors is that you should have some of your portfolio, but at least 5% of your portfolio in energy. Because when we see energy going forward, you have a big demand from AI, from electric vehicles. So it's not going to be like, oh, it's going to decline. Over the next 20 years, you're going to see demand for energy increase. So we need to have energy, oil and natural gas. Natural gas is going to Europe. I mean, we've got so many needs there.
Some of those things are here to stay.
They're here to stay. So
Yeah.
put some energy in your portfolio. I'm not talking about the high flyers. I'm talking about your basic companies that do oil and natural gas production, and say, gee, where will this be in 3, 4, 5 years down the road?
That's good advice.
Thank
Thank
you.
you, Brent.
You're
Nice to
welcome.
see you. Enjoy your
You as well.
Sunday.
Thank you.
All right.